With only 11 days left until the Bitcoin halving, Bitcoin's strong monthly close indicates that bulls are still strong and pushing for highs. In today's episode, we're going to be looking at some longer-term signals to help predict what we can expect for Bitcoin moving forward, as well as evaluating what the effect of the coronavirus lockdown has had on society. Stay tuned for Breaking Bitcoin. That button didn't work. Let's try this.
Hello everyone, my name is Silvio Micali. I'm the founder of Algorand and I'm proud and happy to be here with this edition of Breaking Bitcoin.
Just love technical difficulties. They're the best. Welcome back to Breaking Bitcoin. We're coming to you live every single day at 12 p.m. Central Standard Time. This is your daily source for everything cryptocurrency, markets, and finance. I'm your host, Justin Wise, lead analyst at crackingcryptocurrency.com. Hopefully you guys are doing fantastic. We've got a terrific show for you guys today. So much that I want to cover. Before we begin, there has never been a better time. Regardless of everything that's going on, stock market dropping, Bitcoin going crazy, there's never been a better time to join our community and start building your own verifiable trading system. You can take advantage of not only our proprietary indicator suite like Minx, Time Transformation, Quadriga ATR, Parallax, Baseline, but I repeat myself, community mentoring, premium trading signals, and our suite of educational material and courses. For more information, click the link in the description or point your browsers or mobile devices, looks even better on mobile, to premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got a fantastic show for you guys today. Before we begin, we want to talk obviously about the traditional markets dropping. And why are traditional markets dropping? Is it because the stock market is fraught with peril and we are going into a multi-decade long recession and investors know it and they are selling their stocks and it's the end of the world? Oh my God. Or could it be something that is more normal and benign, which is that earnings reports have been released for many companies. Quarterly earnings reports have been released for many companies, and we know how earning reports look. Now, for those of you living under a rock, that's totally fine. Rocks are cool. Earning reports are quarterly reports made by companies and corporations, and they can include net profit, losses, capitalization, cash flow, et cetera, et cetera, et cetera. Obviously, many companies have seen large chunks of their profitability cut by the COVID lockdown and quarantine. Earnings reports are one of the most fundamental benchmarks that investors are going to be utilizing when determining whether or not to invest in a company and how strong that company is performing relative to the market standard, or relative to just, how responsible companies should be approached. With negative earning reports, it's not really a wonder to see a loss of confidence in traditional assets, right? And of course, kind of the battle cry is the expectation that Bitcoin will decouple. I've seen a lot of rather bullish charts this morning indicating that a lot of individuals feel that Bitcoin has decoupled kind of with its strong movement upwards. But if you kind of go look at what the futures are doing in the SPY this morning, and you see that Bitcoin is kind of just pulling right back down with them. Of course, Bitcoin putting on much more pronounced movement to the upside. So I will not deny, as a Bitcoin bull, as somebody very excited, that it is beautiful to see Bitcoin doing its thing. Now, Bitcoin is currently on the day, intraday, trending to the downside, but overall range bound over the last night, basically ever since last night. Strong push upwards, selling back down, and we're approaching this kind of support that we formed in the $8,500 to $8,400 region. Now, it is good to see that open interest and volume are rising as we hold support. However, Bitcoin is currently range bound. There's not a significant premium on Bitcoin, nor is the funding skyrocketing to large levels, right? The market is still net long, and so am I. So this does not look like a blow off top to me, right? It doesn't. I don't care what any of the candlestick analysis say. This doesn't look like it. Volumetrically, delta wise, it does not look like a blow off top. So I think that there's a high likelihood that we do see some range bound activity moving into the weekend unless Bitcoin actually really does decouple and the individual investors do come in and push strongly on weekends, which usually doesn't happen. But high likelihood that we are range bound over the weekend, which means that those intraday traders with reversion to the mean strategies are going to be served well or utilizing lower time frame reversal within the trend strategies, i.e. waiting for price to come low and going long over the next 48 hours with a good potential to actually break the range to the upside and continue pushing coming up on Sunday morning or Sunday evening, maybe even moving into Monday or Tuesday, right? And that is in the event of Bitcoin decoupling, which we are kind of expecting. However, with that being said, and the crowd goes wild. Yes. A lot of take profits happening. Good day for me. Good day for the trading group. We're going to be analyzing and looking for opportunities moving forward later for the premium group as well. Of course, we'll be pushing all those updates to the Discord channels, working on continued automated signals as well as our analyst signals. And I will have some very, very nice analysis for you guys later. But before we get into the markets, I want to cover, obviously there is this fundamental event that is overshadowing everything that is occurring right now in the world. And of course, that is coronavirus. And it doesn't really matter what side of the aisle that you lie on. Of course, on one hand, you've got the radicals on one side who say that, listen, if we can just save one life, the lockdown is worth it. I don't agree with those people. I think that as with all things, there is cost-benefit analysis. When you go to absolutes, absolute. What's the Star Wars quote, right? Only a Sith deals in absolutes, and that's always true. And this goes into what I was saying yesterday when we were talking about conspiratorial thinking. The problem that I have with the kind of conspiracy theorist mindset, although there are many conspiracy theories that I attest to and that I believe in, is that it's often it's an absolute, right? Either this or that. And the world typically does not work that way. There's not many entities that are absolutely evil, not many entities that are absolutely good, just as there's not any individual thing that is absolutely good or absolutely evil, right? The world is complicated. The world is a wide swath of grays. And it doesn't really behoove us to have good conversations and to make good ideas about how to move the world forward, how to affect our personal lives when we think in these more simplistic terms. So I think that it is very important to define our terms, to use our words carefully, and to mean what we say. Right? And the only way that we can mean what we say is if we know what we're saying and what we're talking about, which, I think that distilling things down into oversimplified categories doesn't really help us out, right? So on the one hand, you have those who will clamor that, the lockdown is completely justified and that going out of the lockdown is just going to spike the numbers back up. And of course, we're seeing reduced numbers. And of course, people think that we should be left out of lockdown because, hey, that is the lockdown working. That is what we're supposed to see. We are seeing the numbers drop off. We did not see the hospital system overwhelmed. And that is because we took immediate emergency action. Well, and some would say that we didn't even do that. Locked everything down, told people they can't go to work. And as a result, we've suffered this economic calamity. However, the numbers have to be, reconciled with, right? We have not seen this explosion of deaths that we were expecting to see, that we were told that we were going to see. We haven't seen this overwhelming of the hospital system that we were told we were going to see, like not even close, right? Regardless of what the scary the numbers look like. And this leads many of us to wonder, those of us who are actually hurting from the quarantine, from the economic lockdowns, who are still having trouble getting the products and services that we need, who are still seeing supply chains drop off, those who are trying to order products for their business, those who are trying to order base materials for the things that they're doing. And this is everything from construction to electronics. There are issues and interruptions with the supply chain, not to mention food. So individuals are actually hurting. Of course, the stimulus money, which was supposed to help Americans out, is pretty slow in getting out. The only people that got it fairly quickly were those who have traditional banking and who did the e-file and who did direct deposit. Those individuals who did that fairly quickly got that. But those who do not have access to traditional banking did not get there, have not gotten there, and checks are very slow to get out. So people, of course, are hurting, and they're hurting even more because they cannot go and find a place to sell cheap labor. There's not a marketplace for cheap labor right now. Well, there is a black market for it, which is good because you're always going to see innovation come in on the black markets when traditional government comes in and shuts things down, which is not a good thing. So we'll be kind of analyzing that. And then, of course, on the right-hand side, so we talked about the left-hand side where it's like, listen, if we can do anything to just save one life, it's worth it. That is a simplistic way to view things. You always have to weigh the costs because it's possible that you physically save one person's life from medically induced death, but it is possible that you cause the death of 10 people over on the other side due to economic downturn, right? And these are real. Like this idea that the cure might be worse than the disease is certainly something that we need to consider. And I don't know if that's right or wrong, but I do know that those who refuse to have that conversation and say that you are immoral for even wanting to have that conversation, I know that they are wrong because that is not the way the world works. And that is not how adults function. This is not how adults behave. This is not how we get to a logical solution of what to do with our lives and with our societies is by saying, you're not allowed to speak on this. If you speak on this, you're a bad person. And how dare you say that because you must not like puppies. Do you hate puppies? Do you want to see puppies die? Do you want to see grandma die? These are all logical fallacies and obviously appeals to emotion, which are not actually fundamental ways to arrive at truth, or to be honest. On the other hand, of course, you do have those who are certain that the coronavirus is a government plot, a push toward global communism developed in a lab, designed and engineered to completely bring society down. And this was all a large plan for a totalitarian push from government. Now, I think that elements of both sides are true. So I think that the truth is most likely somewhere in the middle. While I have no idea whether or not this was something that was engineered in a lab with predilection, it does seem, as we have coronaviruses in nature, it does seem like it is totally logical that this could be a natural occurrence, right? Regardless of what, and of course there are some spooky things about that, but you just don't know. I just don't know, right? So I know that it's possible that it originated in a lab. It's also highly possible that it originated from nature, like all other coronaviruses do. Like we've seen very dangerous pandemic viruses occur from nature, right? Do you think the Black Plague or dengue fever was created in a lab? No, it emerged from nature. And overall, those have been far more deadly than what we're currently seeing with coronavirus. So the idea, if this is the best that they've got that they cooked up in a lab, I'd say that our, evil mustache twirling scientists are kind of falling off the map, right? They're kind of underperforming, right? If they can't beat the Black Plague, if they can't beat dengue fever. Having said that, it is absolutely true that governments will not let a crisis go to waste. And just very similar to 9/11, look at all the things that the American government, for example, pushed through with the restricting civil liberties here in the United States and implying mass surveillance and applying wiretapping and, applying, very clandestine operations. And I think that overall, this idea of making government or people dependent upon the government. And we can see this very clearly if we look at things like the collapse of Rome and how they appealed to populism. And of course, the natural progression that follows after these events, such as rises in populism or a desire to have a populist government come in. And we're certainly guilty of that now. So there are elements of truths on both sides. So we're going to be reviewing that, looking in the middle, trying to break it down. With that being said, if you're new to the channel, make sure to like, share, and subscribe. If you subscribe, make sure you get notified when we come, but not unless you smash the bell icon. That's the only way you get notified for sure when we go live every single day, Monday through Friday, that is, from 12 p.m. to 1 p.m. Sharing it helps people know that we exist, and smashing the like button helps us get populated out in the YouTube algorithm, because it is hard out here for a content creator. So make sure to like, share, and subscribe. With that being said, if you have any questions, comments, or concerns, put them in the live chat. The moderators will bring my attention to them when we get into the Q&A section later on, and I will be keeping my eye on the live chat as we progress. With that being said, let's get into our first story of the day, analyzing the coronavirus lockdown. Of course, it cannot be helped from mentioning that the Bitcoin halving is less than 11 days away, ladies and gentlemen. 10 hours, 20 minutes. Have you sold yet? Are you planning to sell a local top, or is this just the accumulation before we burst off into the all-time highs, 30, 40, 50,000, because Bitcoin blockchain life forever, baby. We'll talk about that here in just a little bit. All right. However, so we have just wrapped up the month of April, and depending on where you are in the world, you're most likely about 5 weeks or more into this COVID-related lockdown now. It is what it is, right? And it's been a while. Time flies. So again, of course, now is a good time to reflect on what's been going on, because opinions are split on whether or not this lockdown was justified, and if the outbreak is or was ever as severe as many have predicted or currently expect. And it was not, remember that it was not too long ago that White House medical expert Dr. Fauci predicted millions of American casualties. That was just not too long ago. Millions of American casualties, we were told. And this has, of course, brought many to debate whether or not the government has the right to deny people their basic freedoms. And will it be able to maintain this state of lockdown much longer, with the economy and even supply chains that are responsible for getting food to markets and basic materials to producers beginning to show warning signs that a return to work is absolutely essential to prevent an even greater economic disaster. Now, what's great to see, in my opinion, is this event causing normal citizens who don't normally question government structure and intervention, now seeing their daily lives affected, beginning to have the same kind of water cooler conversations that many who frequent this channel are prone to have with their friends and family, or maybe the stuff that's just people like us rant about, right? So among the voices advocating for a return to work is Elon Musk, darling of the tech world, who on Wednesday tweeted, all in caps, "Free America now." which did ignite a firestorm of criticism, with many feeling that a return to work is fraught with disaster and was even irresponsible of the tech billionaire to even suggest, like completely irresponsible, right? Now, Musk followed up with a reference to Texas, which we touched on briefly yesterday, praising its plan to begin reopening small and medium-sized businesses as of today, Friday, May the 1st. Be with you. I think we're a little early for that. Now, Texas's plan to begin reopening is going to be following a staged rollout, which means restaurants, retail stores, movie theaters, and shopping malls are going to be reopening today. And then in about 3 weeks from now, on May 18th, barbershops, bars, gyms, other businesses will also be able to get back to work. So this is a good insight as to what reopening the economy will likely look like across the rest of America. It is going to be occurring in stages where those things that are considered more essential are brought online first, right? And Elon praised the Texas authorities for their attitude, writing bravo in his earlier text on Twitter. And with times getting desperate for most Americans, and with stimulus money not getting out soon enough to help enough people, which of course we criticized from the very beginning, there are growing calls to allow people to resume their daily lives and economic activity, even if opinions are very split on whether or not it's safe to do so, and if it will lead to a surge of new infections and kind of resume the spread and push us back into crisis mode. Now, CNBC reporter Phil LeBeau was also another voice who agreed with Musk's comments that America needs to get back to work. He agreed with Musk's sentiment that freedom is at stake here, right? When Musk wrote that government may be overstepping their bounds by enforcing this extended lockdown, and this entire scenario is beginning to look more and more like a fascist power grab by the state with every passing day. Maybe didn't generate that way, but of course, let no good crisis go to waste is the motto of all good governments, and it is turning into that. In addition to that, U.S. angel investor Jason Calacanis has also voiced his support for Elon Musk with a rather reasonable and level-headed take on the entire situation, writing on Twitter how people must be able to choose for themselves whether to elect to self-quarantine or to go back out into the wide world of the COVID and keep the economic wheels turning. It is individual choice. It is not the role of the government. Now, another figure from the world of finance, and I've got the link for this somewhere. Let me go find it. And I don't have the link for it. Okay. So, I guess I don't have the link for this one, but another figure from the world of finance, the billionaire investor Tim Draper, of course, also chimed in to support Musk amidst the fury that Elon's tweet generates, writing that we ought to be getting back to work right now. Now, of course, others, and we kind of reference this at the very beginning, others are arguing that the lockdown is in fact working and that it has prevented a larger disaster from having taken place. Now, many of those individuals are kind of gripped in fear over this outbreak, right? And they have taken to calling anyone who dares to question this current medical orthodoxy as cove idiots who threaten everyone's life. But still, regardless of how short-sighted they may be, there is still something to be said about the whole situation, right? Whether the cure, the lockdown in this case, is actually worse than the disease, if it means that the economy is sent into a decade-long Great Depression and people go hungry, right? It should be up to the individual to decide whether to self-isolate as a precaution. Perhaps, and again, we've said this before, this is pretty simple, right? This is logical human stuff. Those who are at elevated risk, like seniors or those with pre-existing conditions, can choose to shelter in place, while everyone else, the young, healthy, the strong, who didn't access stimulus money and are going broke with an extended shutdown, can choose to return to work and make the decision to assume reasonable risks in doing so. And another factor of this too is that we already saw, I think, overall, as much as we talk about the fact that the majority of humans are irresponsible, right? We're not just these terrible, awful, wicked creatures, right? If you actually look at the stats, people were people were people were already not probably not as good as they could have been, or as good as we can be, right? But people were already socially distancing. People were already beginning to wear masks in public, right? Before we were ordered to by the state. And again, we have seen, particularly communities that wear masks regularly. Whenever it's flu season, right? So, the idea of wearing masks is kind of unnatural in the United States, but it is not the government's right to force us to do such a thing. I think that individuals are smart enough and capable enough of selecting the risks themselves. And over time, again, we talked about this yesterday, those with a high time frame preference who make responsible decisions and plan ahead accordingly are rewarded, and those with a low time preference who do not think ahead are punished. And this is how it works. But ultimately, I wanted to cover these things, and I want to know what you guys think, right? I want to know what the situation is like. We have an international community here. So what is the situation like in your local community, right? The early signs are beginning to suggest that this outbreak has peaked. And are you guys on the board of getting back to work and returning to normal? Or, does the majority of the viewership here think that COVID-19 still represents a major risk to society? And a flood of people returning back to the workplace and gathering in public is going to lead to another spike in infections and restart this whole process all over again, which would actually be worse, right? There's nothing, it's kind of like being receiving how do I say this without being too morbid? It's kind of like a loved one dying, and although as terrible as that is, it is definitive and you can move on. And then thinking that a loved one's going to die and then getting the knowledge that they're actually going to be a vegetable, right? Which is worse, right? The idea that you lost something, or getting to hold it for a brief second before having it ripped away again, right? Often the fallout from the second can be more pronounced. And in the case of the economic recovery, like, oh, hey, the economy's going back to normal, we're all getting back to work. Oh, no, everybody's dying again. Oh, now we're locked down for another year. The depression that can kind of follow, and maybe the economic fallout that could follow from that, I think would potentially be worse than what we already experienced, right? I think that the majority of individuals are probably going to be somewhere in the middle, where you do feel that COVID represents a danger, but the government's authoritarian response is overall not justified for such an extended period of time. Now, there is, of course, something to be said about assuming a certain amount of risk when leaving your home and going into the wider world. Right? The government cannot guarantee everyone's safety in all corners of society, in most corners of society. So while people can go gather in and around Walmarts, the COVID-1984 response by the government barring people from enjoying relatively isolated parks and beaches makes absolutely no sense, right? The worst possible place for people to be is inside. People can socially distance responsibly outside. Again, be sure to let us know in the comments where you stand this Friday, May 1st. We've had about 5 weeks or more of lockdown up to date to think on it. So really looking forward to hearing what you guys have to say in the comment section down below. Our next story is going to be about asset management firm Grayscale, right? Which of course specializes in helping institutional players buy into and manage digital assets like Bitcoin and Ethereum. Of course, we covered the premium that ETHE investors into the Ethereum into the Grayscale Ethereum fund, that they were paying up to a 400% premium just to have Ethereum. And we talked about the potential repercussions of that. Of course, we've covered them. We covered what they said yesterday as well. Now, they have just dropped their latest market report for investors and clients to consider regarding the digital asset space. And in this publication, Grayscale's conclusion is that investors' best bet against central bank money printing is Bitcoin, and not really gold, right? Their best bet is Bitcoin, not actually gold. So the document is titled Bitcoin's Quantitative Tightening versus Central Bank's Quantitative Easing. And in it, the world's largest digital currency asset manager is warning that unlimited fiat money supply risks debasement of the United States dollar. Right? This is typically known as hyperinflation. They describe the leading cryptocurrency Bitcoin as the ideal safe haven moving forward, explaining how its technical prowess sets it aside from gold, fiat, and government bonds. Completely different category. It explains how untenable levels of debt and fears of widespread default are driving the most aggressive monetary policies since Bitcoin's creation back during the economic crisis in 2008-2009. With fiat currencies currently at risk of debasement in their eyes, and government bonds returning low or negative yields, and with reports cropping up that precious metals markets are seeing delivery issues, even gold is starting to look like an antiquated safe haven asset, according to Grayscale. Right? Don't get mad at me. Gold bugs, don't get mad at me. According to the Grayscale report, limited options remain for investors looking to hedge in an environment characterized by uncertainty, right? Remember that uncertainty is the worst possible thing for the markets, right? It's the worst possible thing for economics. Now, the title of the report, Bitcoin's Quantitative Tightening, is a term that they've coined, no pun intended, to describe Bitcoin's upcoming block reward halving that's due in about 10 days' time, right? Again, this is contraction of the monetary supply. This is deflationary in a sense. So whereas central banks are now engaging in unlimited quantitative easing, Bitcoin's daily new supply being generated is getting cut in half for the fourth time. We are, after all, 18.3 million coins into the 21 million hard cap of Bitcoin, which puts into perspective how little inflation remains to Bitcoin supply. Sorry, I said fourth time. I actually meant third time. I apologize. Others are referring to this juxtaposition between central banking and Bitcoin as quantitative hardening, which is a play on the idea that Bitcoin is a hard money versus fiat as easy money or soft money. Now, finally, the report concludes that Bitcoin is showing signs of becoming a safe haven while maintaining that it represents an asymmetric return profile for investors. And of course, if we look at 40/60 models, 40/60 portfolios, any portfolio that included a 1 to 10% allocation to Bitcoin overperformed the market index over the last 10 years, period. Now, the Grayscale report describes the current world as challenging all of our current preconceived notions of what is normal and what is possible, right? Bitcoin has opened completely new avenues and doors. And if you have any doubt about that, look at all the altcoins that have been created since 2018. And that means investors need to challenge their currently held ideas that fiat currencies, yes, even the dollar, is going to retain their value moving forward, and that it is time for smart managers to start paying attention to Bitcoin. Now, despite the panic and meltdown in March caused by the COVID outbreak, Grayscale has fared pretty darn good, with it now, has fared well with the overall situation, right? Now, Grayscale has fared well despite the huge panic caused by the coronavirus in March. The company now has $3 billion in assets under management, while earlier this month it was revealed that they now control 1.7%, not 17%, that'd be a lot, 1.7% of the entire Bitcoin supply. Now, the report, for the most part, doesn't hold back in its criticism of central bank policy, and it does insist that investors understand the effects of government monetary and fiscal intervention, which we are now seeing at an unprecedented scale than we've ever seen before. Now, much of the language in the report concerning monetary policy and how it relates to Bitcoin echoes many of the standard cryptocurrency talking points, particularly those from Saifedean Ammous, who extensively addresses fiat weakness in his popular book, The Bitcoin Standard. Highly recommend you guys read that. Definitely go pick that up. It's one of the best books out there. Or as Max Kaiser put it in his latest Kaiser Report podcast, we as a society cannot print our way to prosperity. Or as I would say, we cannot print ourselves out of debt. Simply cannot. It's not how the world works as much as they want us to think. So definitely, guys, go check this out. Definitely go check this report out. Very interesting. Let us know what you guys think. With 11 days left into the halvening, is this an overly bullish report put out by somebody with a predicated interest in holding Bitcoin? As I said, they do hold 1.7% of the supply, so it would be in their best interest to see the valuation go up. Of course, they're a management company. Or are we actually really, truly super duper bullish? We're going to break out. Let me know in the comment section down below. All right, guys, with that being said, so much to talk about. Let's get into today's daily analysis. We're going to be looking at some monthly stuff too. All right, so here we are on TradingView. Of course, a big gap down from the S&P 500 today. Big gap down from the S&P 500 today. Thank you so much, Jack. Putting a link to that report if anybody is interested. All right, so here we are on the daily chart of Bitcoin. We, of course, are looking at the futures here, but let's get a little bit more long-term. Let's look at the Bitstamp chart. All right, here we are on the Bitstamp chart. It seems like it's been a while since we looked at this chart. Look at all these levels. It did very well. Okay, so we will remove those for now. Come back to those later. And the first thing that we, of course, want to do, those of you who are new to the channel, we will simply look at where price is in relation to the baseline. And this determines what our overall trend directional bias is. It's above the baseline. Price is quite bullish. Okay. So overall, the baseline determines for us as technical traders in what direction we should trade. When price is above the baseline, we only look to go long. When price is below the baseline, we only look to go short. And this is one of the most contributing factors. This is the most difficult concept that traders deal with in what direction to trade. Right? Many individuals get caught up with the idea of trading reversals or not knowing whether the market is ranging or whether the market is trending. Again, the most profitable setups always come from when the market trends, particularly when we're talking about Bitcoin, which is a trending asset, right? Individuals, I've seen this happen so many times. Individuals get obsessed with trading ranges, right? And then Bitcoin goes on a huge spree and they end up short an entire rally or they end up long an entire dump, right? And it makes no sense when they could be short an entire dump or long an entire rally, right? And that is the way that we trade. All right. So Bitcoin putting in its third kind of, I'm going to ignore the long wick to the upside on the initial pump candle here, putting in a large doji candle yesterday, not forming a lower low today. So this does not fit the pattern of a shooting star pattern. Of course, it could if we do end up putting a subsequent lower low. That is going to be a candlestick pattern for a reversal, the shooting star pattern with the inverted hammer candle that we do see on yesterday's candle. However, we are, of course, biased to be trading in the direction of the baseline that is going to be looking for trades to the upside. And of course, here in a second, we're going to look at the volume profile support and resistance chart to get a better glimmer of where we are. But just overall, sticking to the daily and looking at the technicals of the chart, we have no significant deviation in trend. The baseline is sitting down at 76.36, meaning as long as price is above 76.36, I would consider, particularly with moving into the halving, any dips above 76.36 as kind of meso opportunities. I would say actually daily opportunities, maybe even weekly opportunities to accumulate before a push up to the upper boundaries of our resistance pre or post halving, right? Again, not sure. I do expect us to kind of get a sell-off pre or post halving. I'm not sure if it's going to occur pre or post halving. It's going to depend on how the technicals line up. Right now, it's not indicating that's going to occur pre halving. It really depends on what the price action over the weekend, not really over the weekend, but what happens come Monday. And I would assume, honestly, what the traditional markets do as well. All right, with that being said, all right, now looking at my system for trading, the breaking Bitcoin indicator, looking at where we are above the continuation filter, sitting at 81.4909, i.e., in my estimation, for my technical trading system, I will remain in my position on Bitcoin as long as price is above 81.49. That is going to be my invalidation level if we should get a daily close below that level, which will dynamically adjust with price on each subsequent daily close, then I will be exiting my position. I remain net long on Bitcoin. I will still remain spot long on Bitcoin as long as we are above the baseline. However, for my leveraged at long risk, of which I have taken partial profits on, my stop loss is sitting at break even. However, that 81.4909 is above my stop loss. So there is a possibility that I will trail following this last dip down. I think that now is a relatively good time to be sitting on a trailing stop loss, particularly because we've moved so far away from our initial entry. And if I were to set a stop loss, we'll go over that here in just a little bit. That's something that we're going to be kind of going over tonight with the analyst team before we put on our final recommendations before moving into the weekend. Is going to be setting that appropriate trailing stop loss. Okay. So overall, this is fairly simple, right? And of course, we've got the initiator down there at 74.48, which is going to be indicating where the trend actually flips. If price begins to trade below 74.48, then we are going to be looking like we are entering into a bearish trend. We are going to be looking at potentially retesting our accumulation level in the 6,000s, but I will be banking if we do end up closing below that level that we actually trend lower than that. And that's how I've been profitable trading Bitcoin, trading in the direction of the trend. And when the trend flips bearish, expecting for price to continue to list to the downside, right? So, but we are a far way away from that. We're not anywhere near that right now. Okay. Zooming out here a little bit, looking at our momentum oscillator, Minx. Minx is, of course, in overbought territory. It is listing down. It is looking like we are going to get that cross under. Today is, of course, going to be the final day of trading. And again, if this were to occur, of course, the last time that we ignored the take profit signal was going to be on a Sunday. And we were very glad that we ignored that signal because weekend data can be inconclusive. So again, if this occurs over the weekend, we will likely be ignoring it and we will see what occurs, what kind of reset that we get coming into Monday. Of course, we are in overbought territory on Minx, so this is traditionally a logical time to take profit. However, we must keep in mind that Bitcoin, as one of the strongest trending assets, has the capacity to trend much stronger from here. And every single previous time that we've entered into a very bullish trend, regardless of what momentum oscillator that you've used, it gets pegged in overbought territory, with the Fisher transform reaching on the hourly up to +6. Remember that the Fisher transform is supposed to encapsulate price into a wave function into a Gaussian curve that only oscillates generally between 1 and -1. So when we see something like +6, woo, you know that price is a little pushed to the upside. All right. With that being said, man, I wish I had some coffee around here. Drank all my coffee this morning. Okay. And then if we go down to Parallax, we do have Wada Atari Explosion, which is our volume confirmation and volatility filter. We do see that we do no longer have a rising explosion level, meaning that volatility is starting to curtail off a little bit, and we can see falling volume delta, which is natural given the consolidation that we've seen. This has not flipped negative. This has not flipped bearish. We do not see an overtaking of sell volume trended when we detrend it. We do not see an overtaking of sell volume taking over long volume at this point in time. And volatility is falling, indicating that we are in a range-bound area. So, range-bound trading strategies intraday have been the best over the last 2 days. But of course, I don't think that they generally compare to the profits that one would have made taking that trending trade from the upside from the initial point of breakout. And of course, we were long initially on Bitcoin. Let's get our BL up as well. Yeah. So this is where we initially entered into our continuation long on Bitcoin. So overall, the profits on that have been quite good. This candle generated take profits, and we are currently just sitting in a very profitable situation. Potentially the trailing stop loss will be set on later on today. Well, we'll take it, guys. We'll take it. What it probably is if, I don't want to say that YouTube has been unkind to us, but perhaps, they thought about it today at their administrative meeting and they were like, yeah, we've been really hard on these breaking Bitcoin guys. Let's hook them up. I'll take it. Parallax as well. And this is what I'm really watching closely, right? Parallax is the bee's knees, guys. Parallax is our our longer term momentum oscillator, right? And it really nails when the trend flips, right? Of course, none of our strategies, actually that's not true because we do have Minx and we do have time transformation, which can be utilized for reversal systems. And they do work quite well. And the ISIS spot, which we're developing right now, is going to be designed to catch range trending tops and bottoms. That's how it's designed to work. But this, for the daily particularly, is amazing at letting you know when the trend is flipping, right? And Parallax is nowhere near bearish. It is sitting at 96.42. That is a nice healthy level, nowhere near the overbought territory of 200. That's typically where it starts. It doesn't really, Parallax doesn't get pegged, right? Parallax is just smooth and natural. When it gets to about 200, if it gets overbought, it's generally a good time to sell. But as Parallax goes below zero as a centered oscillator indicator, right? When it goes below zero, it's going to be indicating that the trend is going to be bearish. And we're nowhere near that right now. We're nowhere near that. Parallax is giving us very healthy numbers, very healthy signals right now. So overall, I think that things look good. I think that Bitcoin's price looks healthy. I think that we can remain pegged in the overbought territory and we can actually push higher. And this makes a lot of sense. First off, let's go to Ethereum and take a look at Ethereum. Ethereum looking very similar to Bitcoin right now. Again, having a more extensive sell-off yesterday, but rallying a little bit harder today, but overall forming the same pattern as we can see, consolidation at highs. We haven't been able to break down. This doesn't look like distribution. We don't have enough time yet to call this distribution. So looking at our BB system, we do have our continuation filter sitting at $200.01. Ethereum's price is overall bullish above 201 cents. Now, continuation trades could have been placed when we crossed this level right here. I do believe we had exits at one point in time. So just looking at the BB system, continuation was here and exit has not occurred. There's been no signal for an exit. Of course, I have long exposure to Ethereum from holding spot Ethereum, but I don't have any leveraged risk applied to Ethereum like I do with Bitcoin. Like I've had leveraged risk applied to Bitcoin for over a week now, right? I've been leveraged long on this entire move into the upside. Mr. Ether would give me some coffee, but all we have here is lemons and ice cream. All right, so for Ethereum, looking for some more information here. We did have, let's see here, continuation long signal here, continuation long signal right here, which has not yet played out. Parallax is still very bullish on Ethereum as well. Water explosion is signaling a little bit more caution on Ethereum, confirming the CL and the previous CL, but not on current daily close. But of course, we haven't invalidated current longs. Now, Minx is going to be generating an exit signal on today's daily close if we do end up closing down. All right, let's take a look at the lower time frames today. Let's see here. Yeah, still really nothing from the ISA spot so far. And I've got the settings right now, particularly for the stream delay. Delay very conservative, right? So getting near this overbought level almost indicated a buy right here. If we really zoom in here, you can almost see where we indicated a buy, but not quite. Let's see here. Do we see any? No. We do see actually a little bit of regular bullish divergence down here on the 45-minute time frame, on the lower time frames for Bitcoin, where we have formed this low right here and forming a lower low right at today's point of control. So for me, the area where we need to get is going to be, if we look at yesterday's point of control. If we look at yesterday's point of control, sitting about 88.36 on the ByBit chart, you can see that while we consolidated at today's point of control, we had a nice push to the upside. We're not able to hold yesterday's point of control as support, consolidated and broke down. And now we're having that same struggle and battle at today's point of control. So a lot of accumulation being put in here. Unfortunately, a lot of individuals trying to sell the bottoms. I am watching... for example, like BitMEX Rect and our own Rectisar bot, which you guys can check out in the Discord, which monitors BitMEX liquidations better than BitMEX Rect. And we can see, every time we get one of these candles, you just see price moves to the upside and you see liquidated short. So, it's just so funny that you see individuals trying to sell, in bad areas, in my opinion. So a little bit of regular bullish divergence here, which I believe time transformation is most likely picking up on pretty well. Viewers just crossed below the baseline. CNN realized their mistake. And looking at the 2 and 4 hour Cybot, again, 2 hour Cybot caught this trending signal to the upside. Very nice signal. And 4 hour Cybot caught this trending signal to the upside. And right now in this range bound market activity, of course, Cybot is going to be a meso trending indicator, and it's not indicating meso trend. So it's not going to be generating any signals at this right time. Now, as we can see, the S&P 500 generating a strong exit long signal right here. All right, crossing below the continuation filter, while the S&P 500 index is still overall bullish. In fact, even returning to somewhat of diagonal support right here. We do need to broach 2680. So we need to see some selling pressure for the S&P 500 before I am looking to short the S&P 500. But right now, we do have a strong exit long signal and to be flat on equities markets right now, with the S&P 500 futures particularly dropping off and giving such a steep sell signal, which, by the way, is really good for my Tyson long short. All those people who are trying to sell in a bull run are future customers. Just And looking over at Bitcoin CME futures on the daily, so we can exclude weekend data right here. We talked about this before. We did, of course, breach into the upper boundaries of the CME gap, and we are currently consolidating with high volatility at the upper range of the CME gap. So we have not seen large intraday swift rejection, nor do I really expect to see that over the next coming weeks. I do expect us to actually consolidate at the upper boundary of 90.60 and continue to push to the upside is what I actually really want to see. I do expect to see that. All right, Renko time frame, Renko trend. Renko has flipped to the downside again on Bitcoin, but it is flipping back and forth. However, it is indicating that the trend is bearish. And Ethereum Renko trend is bullish, attempting to flip to the bear side. So not a whole lot of information there. I think the most telling chart is, of course, going to be the weekly. And we're going to look at something very interesting here when we look at the continuation filter on the monthly. All right, so here we are. And we talked about this before. I said, and I said this for a while. Listen, guys, here's how this works. Here is the volume profile of Bitcoin. Here is the fair market value of Bitcoin's price. And overall, it doesn't really like to hang out here too much, right? Here is the back the truck up price. And here is what has previously been for the last 2 years, the best range to sell Bitcoin's price, right? Now, again, high or low. And the only question we have to ask is 1, 2, 3, low or high. And we can see that actually working out with pretty darn good accuracy. Look at where we topped previously, right? Look at where we topped previously. Look at where we topped currently, right? So again, a lot of traders are going to be watching that diagonal for us to actually break out above the $9,600 region. Actually, it's going to be like about 9,200 to get a nice weekly or monthly close above that level, breaking above, so overall, I think closing above 9,000 is going to signal to the market pretty strongly that we are going to have a more pronounced push, right? Because we have not been able to break that level. Now, of course, you cannot connect the diagonal from December 2017. Of course, we talked about the fallibility of trading trend lines because, of course, you're going to be getting better signals utilizing the in general, you're going to have better success trading, not utilizing things of that fashion. However, having said that, we are in the acceleration area of Bitcoin. And my previous prediction, what I expected to see was once Bitcoin broaches that resistance level of 8,200, if we can close the weekly above here, we are going to see some pretty rapid acceleration up to the top of this range, which is 10,000 to 10,200. Now, we were able to make it to 9,400. So I think all we need to do is get this nice weekly close above 8,200, and we can talk about broaching the top of this range, right? I don't really get concerned until we lose the $8,000 region. RK asks, what is point of control and how do you determine that? It's determined automatically by technical indicators. So the point of control is the area in which there was the most traded volume by price. So with a typical volume indicator, you're going to see volume by time, as in this much volume was traded on this bar. And if it's very high amount of volume, it's a long bar. Typically, you see the volume indicator at the bottom of the screen. So all we're doing is we're turning that sideways and saying at what price levels was there the most volume? And based on that type of analysis, we can see where are the areas where liquidity resides and where are the areas where liquidity doesn't reside. And price behaves differently in different pockets of liquidity. And a typical fundamental characteristic of the market is that it will trend and move toward liquidity. The market wants to find liquidity because buyers and sellers want to find somebody on the other side of the book, because you need a seller for every buy, you need a buyer for every sell. Oh yeah, got the old school indies on. Now, of course, let's look at classical technical analysis. Here we are on Bitcoin utilizing our classical technical analysis, utilizing a basic simple moving average and exponential moving average cross. We've got the MACD, we've got the RSI, we've got the stochastics, all the usual suspects here that we're going to see on a new trader's chart. And of course, we've got the on-balance volume modification. This one's by EXK. I just kind of chose a random one for this one, honestly. OBV is fine, all in and of itself. Relative strength index is overbought, pulled back down to the upper boundary of the overbought level and actually kicking up today. Overbought. Now, the nice thing to see is that on previous bull runs, RSI has stayed pegged for quite a long time. Here it is right here. RSI stays pegged throughout this entire bull run, comes down a little bit lower, stays pegged throughout this entire bull run, comes down lower, stays pegged. So, it doesn't really become a very helpful indicator. And of course, it does reach its penultimate level of overbought. Yes, on the high. And as usual, the better exit signal was not RSI initially becoming overbought. It was RSI recovering from overbought in periods of strong trend. And with such a fundamental event like the halving on our horizon, if one is looking at something like the relative strength index, again, I would be looking at that same thing for RSI to recover from being overbought and trend below zero. MACD, the trend is strengthening and widening apart. The MACD bands are quite far apart. The histogram continues to rise in strength. We haven't even gotten a single sign of weakness. On balance, volume remains positive. We have not seen volume drift toward negative delta. Stochastics is the only thing that's negative here, generating the sell signal on yesterday's candle. But of course, if you shorted on yesterday's candle, you would have been smoked right in your face. And if there's any worse, offender for remaining pegged in overbought territory, it is going to be the stochastic, right? Just becoming absolutely useless here in overbought territory, So stochastic, not very, very, very good whatsoever in determining lows. And of course, here the stochastic becomes oversold right at the top at the beginning of the sell, and it just continues being oversold throughout this entire trend. So not a very good accurate indicator. And this is why I'm so hard on these things, right? Because they're not very reliable. But, we will just cover them because there are going to be a lot of traders, a lot of movers who are going to be trading in line and in function with these indicators, right? So again, I think that a lot of individuals are going to be selling because of the RSI being overbought, because of the stochastics being overbought. The MACD bands are fairly far apart from each other, so some people start to get a little antsy about that. But of course, the better signal is to wait for the weakness in the MACD. But again, of course, you can see how well that would have done you here. This would have been your kind of early sell signal, and you would have missed out on all that. So this is why I'm so hard on classical indicators, but they can be useful, right? So again, just objectively looking at this, I think that there's not an objective sell signal classically until the RSI crosses back below, and maybe we see our first weak signal from the MACD, right? From the MACD. Okay, so having said that, let's take some time and reward our DLive viewers. It is 12:54, so we are getting close. Shout out to the 18 of my friends watching on DLive right now. Kev J Robo, thank you so much for the follow over there on DLive. Let's throw some lemons in this basket and get it rolling. Mr. Ether, Rhino TD, Val Cornex, Mr. Ether, Taz Blitz, thank you for the follow, and thank you guys so much for the lemons. Highly appreciated. Oh, restream down. Looks like it's working for me. And congratulations to Squeaky Tadpole, the Pie Guy, Ricky T, Rhino TD, and Mr. Ether over there on DLive. Highly appreciated, my friends. Jeremy Hildebrand asks if we did the Ellers interview yet. I haven't been able to keep up with every show. That's fine. Highly appreciated. Yes, I did get a chance. It was quite an honor to sit down with John Ellers. We did do the interview. The editing team is processing that video right now, and I hope to maybe we might have it up over the weekend. If not, for sure by next week. Okay. Here we can see the SPY just continuing its pronounced sell-off. And we can see Bitcoin holding up much stronger than the SPY. This is beautiful to see. Same with the NASDAQ. Same with the Dow, just continuing its ginormous sell-off over the last few days. Here's the Russell continuing its sell-off. Look at VIX absolutely skyrocketing because this is the inverse of the VIX, which is what I prefer to trade. Euro dollar skyrocketing as well, doing quite good. Gold spot rallying off the bottom, but again, having this nice pronounced sell. So Bitcoin tracking nicely with gold right now. Silver, on the other hand, take a gander. Yeah, silver not holding up as well as gold right here. You know, gold rallying nicely off this previous low that was formed. Silver getting hit a little bit more. Good to see Furry Boffin in the house. And of course, SPY following through on its very large gap to the downside today. As with the NASDAQ, as with the Dow, just seeing confirmation in the ETF, what we saw with the futures, of course. Oil kind of stopping after its nice push to the upside yesterday, getting a little bit of indecision. Bonds continuing to rise, but very slightly, not a whole lot of bullish push from bonds. So let me take a look at your guys' questions and see what we can break down here. All right, so the first question here is from Leo. He is new, and he is looking for a strategy system to trade trends. What should I look into? Types of indicators for entry, momentum, and exits, in my opinion. Please help. Thank you. / not Ichimoku. Well, having said that, I will say that, I have one of my junior analysts utilizes, listen, I have helped, not only has one of my junior analysts utilize the Ichimoku in one of his systems. I know I've helped many traders utilize Ichimoku. I've traded Ichimoku, so there's certainly nothing wrong with Ichimoku. However, having said that, this is kind of a nice long progression and quest. This is exactly why I developed the PTP course and system. Overall, good points and pointers. This conversation can last a couple hours. The material in the course is hours of content, but having said that, you want to find a good combination of indicators that give you a good entry signal combined with confirmation that helped act as filters to exclude market noise, right? Now, the search for the initiator is often quite simple. There are many good indicators out there. Of course, we have some that we prefer to utilize because they do the work of filtering out that market noise by themselves. But finding the filters can be a little bit more difficult. But this is quite a joy-filled task and search, is finding those indicators that help you reduce your losses. Any trending indicator worth its salt is going to give you a good entry, but you want to be looking at things like volume, you want to be looking at things like volatility, and you want to be looking at things like momentum to help filter out where those trades, where those entries are statistically less likely to succeed under certain conditions in the market. So I would begin, I can give you a recommendation. The first indicator I would test is the Fisher Transform. It's one of my favorite built-in indicators. We have multiple versions. Time Transformation was based off of the Fisher Transform. The other Fisher Transform, if you're utilizing the Fisher Transform for alt Bitcoins, I recommend using H. Potter's version on TradingView. Otherwise, the default Fisher Transform works very, very, very well. It also works good if you utilize it as a line cross. You can utilize it for an exit indicator. I highly recommend you check out Wadatar Explosion, which is one of our public indicators. You can utilize it on our TradingView, tv.crackingcryptocurrency.com. There should be a link in the description down below. And, the other thing that I'd highly recommend is, hop in the Discord, because this is kind of what we discuss and talk about and deal with all day. So certainly willing to help you out more, and welcome to the community, my friend. I have a question here from Prime Nakuma. By the way, thank you so much for the 7 months of being a subscriber on Twitch, my friend. Can you take a look at West Texas oil? Is there a potential Adam and Eve on the 4-hour? Well, we got classical analysis right here. I mean, on the 4-hour time frame, we're relatively overbought. We're in this kind of trending range. So if you're a range trader, you're going to assume that price is overbought. Now, we have formed a nice V-shaped bottom and a nice rounded bottom. This is a pretty classical Adam and Eve, which gives us this resistance level that we want to break right here. And we are currently broken and consolidating above that, right? So, I mean, the classical entry for this would be, yes, to take a long here and set your stop loss below your previous low and go for a 2-to-1 or 3-to-1 risk to reward ratio, which means you would want to shoot for, let's say you're going for a 2-to-1, you're going to be shooting for 1742. And if you want to go for a 3-to-1, we're going to be looking around 1880 for your take profit. However, the other way, the slightly more smarter way, in my opinion, is to DCA in here, to do a 20, 30, 50 limit buy in this area right here, expecting that this initial push out gets faked out and you actually do get a pullback maybe to your support simple moving average right here. And then whenever you end up getting filled, setting your stop loss via ATR. And we can actually take a look. Let's actually get this on the big screen. Yeah, so if you wanted to do an entry 1 ATR away from price, your initial entry would be somewhere around 1442, 1356 if you wanted to do 50-50. If you want to do 20, 30, 50 on the 4-hour, I think that actually going with the 2-hour is going to fit that risk profile better. Yeah, maybe even the 1-hour. Yeah, there we go. That's a little bit better. Yeah, 20, 30, 50. And then setting your stop loss about 3.5 ATR. I've covered this quite a lot. Yeah, if we want to look at this from a classical perspective, I mean, you're also consolidating above your previous high. I mean, that's a pretty classic. It's a pretty classic looking trade setup right there. Now, just be careful of fake outs. Again, I think the better way to accumulate for that is to maybe take an initial buy here and then expect price to return to this area right here where most individuals are going to be having their stop losses, right? Most individuals are going to have their stop losses around here or right below this wick. So I think it's better to enter around here and have your stop loss below this area right here. because the WTI CFD is now tracking a different futures contract, right? So the farther out oil futures look much, much better than the short-term oil futures. Caprica asks, do I invest in gold ETFs or do I take physical possession? I do both, actually. So, for example, I have positions in SGOL, and I have I have a little bit of GLD. But, you know, again, and then I also have physical gold coins. But see, it's different, right? With physical gold coins, those aren't an investment, right? You know, I buy them for the same reason Robert Kiyosaki buys them, because I think it's hard money. So I never intend to sell gold coins or gold bullion. I have, again, you know, a lot of people laugh, like I bought physical palladium, right? Yeah, it's neat. Look at it sometimes, but I'm probably never going to be able to sell that, right? I just bought it. Now, as far as speculation, you know, when I'm constructing my portfolio, yeah, it's paper gold, right? And I would say that I have more paper gold than physical gold. And, you know, that's heresy to a lot of gold bugs out there, but, you know, I'm more of a, I think that Bitcoin is a better hard money. I think that gold is fantastic. I think that gold should be a natural part of anybody's portfolio. And physical gold is certainly fine, right? But there's problems with that. All right, let's look at the SPY. On the 1 day and the longer terms here. Yeah, so on the weekly, the SPY is exhibiting a gravestone doji. Do I take physical possession of oil? No. I only forward it to your house. So looking at the SPY on the weekly, yep, the SPY on the weekly does look kind of a classic reversal candle right here. You know, here's the hanging man. This is also a classic reversal indicator as well. And then followed up by the gravestone doji or inverted hammer candle that we see right here. With two subsequent lower candles that would confirm a shooting star pattern. And we are rejecting from the 55 exponential moving average and the 21 exponential moving average as well as closing below the 13 EMA. So there is certainly that. You know, now one thing to point out with the SPY on the weekly, which a lot of people watch, is of course the 200. That's the 200 EMA. We want the 200 SMA. Okay, that is the 200 SMA. Good. 200 SMA sitting at about 265.71 on the SPY. So a retest of that level would not be bad. It's about a negative 5%. See if that level holds. Broaching that, I expect you could probably see a gap down below 241.97 actually. If we're looking for discretion. If we're going to be looking for discretion, then we might as well look at classical stuff too, right? Right. So there's the 20 simple moving average. We are rejecting from it. RSI just recovered from being oversold on the weekly. MACD is about to cross back up. Stochastic's already crossed back up over here and threatening to cross back down. OBV is still negative, so volume delta is still negative. MACD is walking its way up to actually giving a positive signal. Not a lot of information here for discretion. The 3-day actually looks tentatively bullish. And we were thinking about this as an island reversal pattern, but it's really not. And the daily, even from a classical perspective, almost looks like it's coming back down to test its level of support. Which, you know, as you know, this is going to get me boos and hisses. But I mean, which the daily is indicating as well, right? We talked about maybe a 5% pullback. Well, there's about 3 to 4% room to go between current price and the baseline and the initiator, which would flip price bearish. And the daily parallax just flipped bearish, of course, giving the exit signal for longs on today's current candle. This nice gap to the downside. Falling volatility on today's daily candle. Yeah, I mean, I would expect to continue to see this pullback, particularly since we're below the continuation filter, but this is a no-trade zone for me. This is a no-trade zone for me. If price gets close to the 273, I think that a long might be in order. Nice double bottom previously here. Actually, almost a triple bottom, right? And if price ends up breaking the 270 range to the downside, well, then I'd be looking to short it back down at least to about 250. Yeah, and the weekly's still bearish. In fact, this is a reversal baseline bounce on the weekly. Back down to the continuation filter at about 266.20 is what the weekly would actually indicate. So, a lot of different ways to look at it. At the end of the day, one has to pick a trading strategy and go with it. So for me, I would be bullish right around here. And if price breaks below this level on the daily closing basis, price is going to move to the downside. Mr. Ether, Hex, man, you know about Hex, man. Up 40x, brother. From the one sat lows. I hope you are sitting pretty, my brother. All right, with that being said, guys, we got a lot to do today. Although it is Friday. A lot of work that we have to do around here. Interesting that it worked that time. Anyways, guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin Market Analysis, brought to you by the Cracking Cryptocurrency Premium Trading Group. If you guys are interested to go premium today, please visit the link in the description down below, or point your browsers over to premium.crackingcryptocurrency.com to learn how to build a verifiable, proven trading system with our team. Take advantage of our community mentoring, premium indicator suite. There's so much. Go read the website. We got a lot of stuff. With that being said, guys, thank you guys so much. Obviously, a lot of stuff that we covered today. We talked about the coronavirus and its effects moving forward, not only economically, but also psychologically. So please, again, I'm really interested to hear that. Like, let us know. Everybody, this is an international community, so let us know in the comment section down below, how you guys feel about the lockdown. Are you guys on the side of, hey, this is really dangerous, we need to stay sheltered, or hey, we got to get back to work. It's going to be what it's going to be. We also covered grayscale, spreading some fumes, some flames for the Bitcoin bulls out there. Let us know how you guys feel about that. And of course, we covered overall price. And again, overall bullish, guys. Overall bullish. We covered the technicals, so you guys make sure to go rewind if you guys want some more in depth on that. And of course, we'll be always active in the Discord if you guys have any further questions. Pretty excited about this weekend. Overall, I think that Bitcoin is going to remain range bound. It's going to be, so the thing to watch is this. The SPY is going to close in the red. I'm not expecting a massive rally over the next couple of hours. If the SPY closes in the red and Bitcoin gets bullish over the weekend, I think that we can expect a massive next week for Bitcoin to the upside, right? Otherwise, if Bitcoin ends up moving into the red over the weekend, then we're most likely going to see follow through and continuation of that. So things to definitely keep your eyes on as we're moving into this weekend. Of course, at the end of the day, let your system make the decisions, because it is better at trading than you are. Almost always, right? Statistically. If you have any questions, comments, concerns, sarcastic remarks, and/or death threats, please leave them in the comment section down below, and we will be back on Monday at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Analysis. Until then, make sure to stay tuned and like, share, and subscribe so you guys can catch our Breaking Bitcoin bits and potential interviews coming out this weekend. Stay safe, everybody. and trade safely.